Tepper School of Business. My name is Lucky Lillygreen, your host of TSBN, and welcome to the last Sunday of September. This month's market activity was exceptionally dynamic. As the seasons change and businesses prepare for the end of the year performance, with quarter four strategic planning, there is a rush of activity. There is a name for this, called the September effect, which states that markets historically underperform during the month of September. While this isn't guaranteed every year, returns for this month average lower than other months, leading to a cautious outlook among investors. On Tuesday, we heard Federal Reserve Chair Jerome Powell speak on the state of the U.S. economy. He spoke about the slowing of economic growth, decreased job openings, weak activity in the housing sector, increased inflation, and a decline in GDP growth due to a slowdown in consumer spending. In addition, he relayed how the effects of new policies surrounding tariffs, trade, immigration, fiscal, and regulatory have yet to be seen. It will take time for these effects to set in, but it is clear, once the tariffs work their way through the supply chain, the effects will be felt. Current inflation sits at 2.9%, the highest level since January. Furthermore, the CPI, or Consumer Price Index, went up 0.4%, also the most since the beginning of the year. Inflation and interest rates go hand in hand, so it is important to understand the concept. The Fed attempts to keep the inflation rate at 2% over the long term, as this supports their mandate for maximum unemployment and price stability. By either cutting or raising rates, the Fed seeks to control inflation. Cutting rates attempts to spur economic activity and growth. On the contrary, raising rates seek to slow down the economy and bring down inflation. As investors expected, in attempts to speed up the economy and help the weak U.S. labor market, the Federal Open Market Committee cut interest rates by 25 basis points last week to settle in that 4 to 4.5% range. This cut exhibits a non-aggressive, neutral policy implemented by the Federal Reserve. As for the U.S. stock market, record highs have tapered off a bit this week, though markets remain strong. The Dow rose 300 points, or 0.7%, the S&P was up 0.6%, and the NASDAQ gained 0.4%. Top market movers of the week include Electronic Arts, ticker EA, which trades at $193.35. The stock was up 11.6% this week over news of a potential $50 billion deal to be taken private by a PE firm. EA makes video games such as FIFA, now known as FC, The Sims, and others. In addition, Packer, ticker PCAR, which currently trades at $100.50, soared this week over news of President Trump's 25% tariff on imported heavy trucks starting October 1st. Packer makes semi-trucks under the brands Peterbilt and Kenworth. It is also worth noting that Trump announced news of a 100% tariff on patented drugs unless the firm is building drug manufacturing plants in the U.S. Micron Tech, ticker MU, delivered very strong Q4 results on Tuesday, capitalizing on memory chip tailwinds. We continue to see yet another technology stock perform well in this market, emphasizing the tech boom we have seen in recent years. Micron and its peers make high bandwidth memory, HBM chips, that are an essential component of AI. The stock has doubled this year, with revenue up 46% this quarter to $11.3 billion. In addition, operating margin improved from 19.6% to 32.3%, with improvements to R&D, SG&A, and adjusted earnings per share of $3.03. So strong results across the board. On the bottom, we have CarMax, ticker KMX, which tanked on Thursday after reporting earnings nearing a 52-week low, now trading at $44.86. The company Q2 results missed earnings and revenue estimates. In addition, AutoZone, ticker AZO, fell 0.9% on Tuesday after Q3 earnings. However, the auto parts and accessories retailer provides goods and services that are mostly inelastic, positioning itself well during times of economic distress as people still have to service their cars regardless. The company has also been expanding by opening 141 new stores, 45 of them in Mexico, though gross profit declined to 51.5% from the same quarter last year. Costco, ticker COST, which reported earnings on Thursday, is down 3.3% this week, despite beating earnings and revenue estimates. This is due to the market already pricing in high expectations. CFO Gary Millerchip noted that the company has worked hard to offset tariff costs and change its merchandising assortment. Lastly, President Trump's new six-figure fees for H-1B work visas are affecting U.S. businesses, particularly tech companies. The policy will also take time to play out, but will hurt the ability to attract highly skilled foreign workers to come to America. As we look ahead to October, fresh labor market data will be out, headlined by the U.S. employment report. In addition, the risk of a U.S. government shutdown looms overhead. Inflation data will be the big topic of discussion in Europe, as fresh inflation data is due for the Eurozone. That concludes our last episode of TSBN for September. Thank you so much for joining us. I'm Lucky Lillygreen, and I hope you have an awesome week.